Hello and welcome to the OctaFX live quiz. I'm your host for today. My name is Ambrose Ebuka. Before I give you details of what this quiz is about, go ahead and type in the comment section your name and where you're watching me from right now. Go ahead and type in the comment section your name and where you're watching me from right now. Today's quiz will consist of 10 amazing questions, and these questions will revolve around Forex trading. Stephen from Nigeria, Udochukwu from Umuahia, Joshua, Adesina Samuel, Godfrey Williams from Port Harcourt, Collins from Enugu, Messi from Ibadan. Massive welcome to every one of you. Osaru from Benin, welcome. Muhammad from Kaduna, massive welcome to every one of you. So this live quiz is going to be made up of two parts, right? The first part is where I get to ask you questions and get your answers, and the second part is where I show you the questions and reveal the right answers to these questions and also give you detailed explanation. But before we go into all that, let me talk about bonuses that you can get from participating in the OctaFX live quiz. So, the most active participant with the highest number of correct answers will receive $100 to apply knowledge in practice, and everyone else will get a super cool trading guide in PDF. So, after this quiz, for participating, you can the most active participants would get or with the correct number of answers will receive $100 to apply knowledge in practice, and you can also get a super cool trading guide in PDF so that you can always learn about Forex and get the knowledge about the Forex market. So we're going to go to part one right now, where I'm going to ask you questions and get your answers. If you're ready for part one, go ahead and type in the comment section, I am ready. If you're ready for part one, go ahead and type in the comment section, I am ready. Let's look at the live chat to see who we have. Joshua from River State right now. Malone from South Africa says it's his first time. Good luck from Abba. Wow. Okay, I'm ready. I'm seeing a lot of I'm ready's right now. So we're just going to go ahead to wow. Fortune says I'm ready. Samuel says I'm ready. Okay, so we're going to go ahead to part one, and the first question is, what statement about Forex do you think is correct? A, allows you to trade one currency pair against another currency pair. B, Forex allows you to trade one currency against another currency. And C, Forex allows you to buy and sell stocks. If you know the correct answer, go ahead and type in the comment section. Steven says B, Samuel Damilare says A, Emmanuel says A, Chandler says B, Samuel George says C, Rita Susan says C, Vicky says A. Wow, I'm seeing a lot of okay. B, C, B. Okay, well, I can't reveal the right answer right now, which is why you need to stick around for part two, where I show you guys the right answers to these questions. What statement about Forex do you think is correct? Allows you to trade one currency pair against another currency pair. Forex allows you to trade one currency against another currency, and Forex allows you to buy and sell stocks. That's question 1. And we're going to move over to question 2, which is, what is the difference between bid and ask prices called? What is the difference between bid and ask prices called? A. Volume. B. Spread. C. Swap. Now you can write the number of the question, so you can say 2A or 2B or 2C, so that you don't just write B, A, B, 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 and answer the right answer for a different question, or so you can write number 2A, number 2B. Okay, Part says number 2 is B. Root says number 2 is B. Okay. Ten says number 2 is C. Tunji says number 2 is B. Damilare says B. Rita says A. Taiwo says B. Okay, what is the difference between bid and ask prices called? A. Volume. B. Spread. C. Swap. Okay, so we're going to move to the third question. The third question. What kind of chart do you see on the diagram below? What kind of chart do you see on the diagram below? A. Line chart. B. Bar chart. And C. Candlestick chart. You know what to do, guys. Answer in the comment section and indicate what number you're answering. Okay, so if 3 is A, for example, you can write number 3A, number 3B, or number 3C. Toby says 3 is V. It's just A, B, C. A, line chart. B, bar chart. C, candlestick chart. There is no V. Bright says 3C. Kachi says 3C. Ogechi says 3C. Happiness says C. Paul says C. Faraday says 3C. Blissnet says number 3 is C. Sunday Wally says number 3 is C. Okay. When we get to part 2, I hope you guys are correct, because I would reveal the answers in part 2. So make sure you stick around for part 2 to get the correct answers of these questions. Number 4, the fourth question. How many USD do you need to buy 100 euros? How many US dollars do you need to buy 100 euros? If the price of Euro USD is 1.19567, how many USD do you need to buy 100 euro if the price of Euro USD is 1.19567? A. 119.567. B. 11.9567. C. 1.19567. And D. Impossible to calculate without USD price. Answers in the comment section. Nakuta Ahmed says number 4 is A. Janet says number 4 is A. Kanu Goodluck says number 4 is A. Samuel George says C. Okay. Uchenna says number 4 is D. Wow. Voice of Reason says number 4 is A. Monday Bob says B. Raphael says number 4 is A. Raymond says number 4 is A. Blissnet says number 4 is A. Udo Ike says number 4 is C. Adeyemi says number 4 is A. Jerry says number 4 is A. Well, I hope every one of you, I can't really say the answers right now, so stick around till part 2, but you find out if you're correct or not correct. So we're going to go to the 5th question, which is, what does a 0.01 lot equal to? What does a 0.01 lot equal to? A. 100,000 monetary units of a base currency. B. 10,000 monetary units of a currency. And C. 1,000 monetary units of a base currency. I'm going to go through the question again. What does a 0.01 lot equal to? 100,000 monetary units of a base currency, which is option A. Option B, 10,000 monetary units of a quote currency. And C, 1,000 monetary units of a base currency. OGD Builder says 5 is C. Janet Alapa says 5 is C. Kemi says 5 is C. Promise says 5 is B. Theodore says 5 is C. Ben says 5 is C. Voice of Reason says 5 is C. Samuel George says C. Uche Williams says C. Musioka says B. Oniya Chris says 5 is C. Princess Kano says 5 is C. Fashina Olamilekan says 5 is C. Greatness says 5 is C. Jerry Obiajulu says 5 is C. Well, we're going to stick around, for part 2 so that you get the correct answers of number 5 or number 1 to 5. And I'm going to move to number 6 right now. Oh, okay, we are getting more answers. Praise says 5C. Paul says B. Oh, that's for number 4. He says number 4 is B. We're in number 5 right now, so Toby says 5 is C. Well, good luck till part 2. Then we can check on the correct answers. I'm moving on to the 6th question, which is, what does leverage do? A. Increases your trading account balance. B. Allows you to open orders with significantly smaller balance. C. You can only trade Forex if you use the leverage. What does leverage do? A. Increases your trading account balance. B. Allows you to open orders with significantly smaller balance. And C. You can only trade Forex if you use the leverage. Team says 6 is B. Ogrima says 6 is B. Salami says 6 is B. Okay. Eshe says 6 is B. Richie says 6 is B. Vicent says 6 is B. Chandler says 6 is A. Joanna Oluchi says 6 is B. Emeka Odama says 6 is B. Vicent says 6 is B. Philip Onya Chris says 6 is B. Olamilekan says 6 is B. Chris Pius Williams says 6 is B. Okay. Moodley says number 6 is A. Okay. Okay, well, who knows? Who knows the correct answer? We have to wait for to get the correct answers in the part 2 of the OctaFX live quiz. Daniel says 6 is B. We'll find out. Okay, so I'm going to the 7th question. Question number 7. Which leverage allows traders to get bigger profit but carries the bigger risk? Which leverage allows traders to get bigger profit but carries the bigger risk? A, 1 to 100. B, 1 to 200. And C, 1 to 500. Which leverage allows traders to get bigger profit but carries the bigger risk? 1 ratio 100, B 1 ratio 200, and C 1 ratio 500. Money main says 7 is C. Okay. Blissnet says 7 is C. King Gizmo. Oh, he's answering for number 6. We are in number 7. Henry Warford says 7 is C. Emeka says 7 is C. Jerry says 7 is C. Mesoma Grace says 7 is C. Austin Dale says C. Haruna Olamilekan says 7 is C. Abdul says 7 is C. And Charles Nizianya says 7 is C. Mr. Faraday was answering for number 6. We're in number 7, guys. Jerry Obiajulu says 7 is C. Okay. Margaret says A. Do well to indicate the number of the option you're choosing. If it's number 7, you indicate 7A or 7B or 7C. Okay, Cool George says 7 is C. Asajuti Milane says 7 is C. Okay, well, we'll find out in part 2 which of the options are correct. Is it A 1 ratio 100? Is it B 1 ratio 200? Or is it C 1 ratio 500? I'm going to move over to the 8th question, which is, how is an account equity calculated? How is an account equity calculated? A, required margin plus open orders profit minus open orders loss. B, account balance plus open orders profit minus open orders loss. C, free margin plus open orders profit plus open orders loss. So tell me, how is an account equity calculated? You know what to do. Write or type your answers in the comment section. Grace says 8 is B. Okay. Rita Susan says 8 is B. Chris Pius William says 8 is A. Enoch says 8 is B. Masokano says 8 is A. Progress Ajoku says 8 is B. Emmanuel says 8 is B. Osaru Jim says 8 is B. Daniel Amar says 8 is B. Joseph Peter says 8 is B. Promise Chukudi says 8 is B. Mr. Faraday says, guys, we're in the 8th question, so always indicate, so that I can identify what number you're answering. Okay. Adeyemi says 8 is B. Wosu Darlington says 8 is B. Olawumi Temilade says 8 is A. Well, we're getting close to part 2, so stick around to find out the correct answer of the questions. Okay? But good luck to you guys anyway. So we're going to the 9th question, right? Question number 9. What could it be? Okay. What is the maximum recommended amount of required margin for beginners to open orders? What is what is the maximum recommended amount of required margin for beginners to open orders? A, 10% of the total trading balance. B, 50% of the total trading balance. And C, it doesn't matter if you have a strong signal. So you know what to do, write or type the answers in the comment section. Mr. Bright says number 9 is A. Uche Wisdom says number 9 is A. Emmanuel says number 9 is A. Michael Oluwashina says number 9 is A. Manny Main says number 9 is A. Jerry Obiajulu says number 9 is B. Somto Jude says number 9 is B. Benga says number 9 is B. Monday says number 9 is A. King Donald says number 9 is A. Ismilia says number 9 is A. Mr. Malik says number 9 is B. 247 Builder says number 9 is B. Israel says number 9 is A. Rita says number 9 is A. John Anthony says number 9 is A. Who Josh says number 9 is A. Paul says number 9 is A. Daniel Armour says A. Always indicates the number that you're answering. Okay. Moodley says number 9 is A. Bossede says number 9 is B. Okay, well, we'll never know the answer until we get to part 2, which is where I show you guys the questions and also reveal the answers to this question. Now it's time for the last question on the quiz, which is question number 10. If you're ready for question number 10, go ahead and type "I am ready" in the comment section below. The last question, guys. Are we ready? Okay. We are ready. Okay, last question. Let's see what it is. Number 10. How do take profit and stop loss pending orders work? How do take profit and stop loss pending orders work? A. Close your market order at a certain level when market price reaches it. B. Close your market order when your floating profit or loss reaches a certain value. C. Close your market order at the exact date and time that you set. So tell me, which one is it? How do take profit and stop loss pending orders work? Go ahead and type the answers in the comment section. Which your wisdom says number 10 is A. Chris Pius Williams says number 10 is B. Vincent says number 10 is A. Jerry Obiajulu says number 10 is A. Ogbegbo Promise says number 10 is A. Van B. John says number 10 is A. Henry Waffle says number 10 is B. RTJ Forex says number 10 is B. Rashid says number 10 is A. Sunday Wally says number 10 is C. Cool Josh says number 10 is B. Murphy says number 10 is B. Paul says number 10 is A. King Gizmo says number 10 is A. Danok says number 10 is B. And Mr. Faraday, who's answering for number 9, We are in number 10 right now. So Onya says number 10 is A. David Esther says number 10 is C. Daniel Amar says number 10 is A. Well, it's the last question of the quiz. So we are going to part 2 to find out the actual or the real answers and the correct answers of this question. You guys have been amazing so far in part 1, dropping answers. So it's time to check the real and the correct answers to these questions. Okay, so we are going to part 2, which is the answers section. All right, so I'll go through the questions again, and then I would reveal the answers to these questions. So the first question in part 2 is, what statement about Forex do you think is correct? A. Allows you to trade one currency pair against another currency pair. B. Allows you to trade one currency against another currency. And C. Forex allows you to buy and sell stocks. You guys said A, some of you guys said B, some of you guys said C. So which one is the correct answer? Which of these options is correct? Only one can be correct, guys. And the answer is option B. Forex allows you to trade one currency against another currency. Guys, a currency pair is made up of two currencies, right? You have the base currency and you have the quote currencies. The base currency is always greater than the quote currency, right? Now, for the first option, which is option A, allows you to trade one currency pair. Now, you can only trade a currency against another currency. When you call a currency a pair, it's made up of two currencies. And in the Forex market, we don't trade two currencies against two other currencies. No. Okay, just like your pair of shoes. You bring the left foot, you bring the right foot, it comes together to make a pair of shoes, right? So that is why the correct answer is B, because Forex allows you to trade one currency against another currency. And the Forex market is a global decentralized market where currencies are being exchanged and transacted, not stocks. Okay, so that is why the answer to the first question is B. So let's move to the second question. What is the difference between bid and ask prices called? What is the difference between bid and ask prices called? A. Volume, B. Spread, C. Swap. Only one of these options can be correct. Which one is it? Let's see. The correct answer is B. Spread. It's not volume. It's not swap. It's spread. Volume is, in Forex, volume is the number of lots traded in a currency pair. So it's like your lot size, the volume, right? And swap is like the interest that you pay for keeping the trade overnight, a small commission that you pay for keeping the trade overnight. Okay, it also depends on your lot size, on your volume that you use to open that position. But the correct answer to question number 2 is spread, which is the difference between the ask price and the bid price. An ask price is the price at which a trader's buy order would be executed. A trader's buy position would be executed at the ask price, and the bid price is where a trader's sell position would be executed at. That is why you have the ask price and the bid price, different prices, and the space in between them is called the spread. Take your bank, for example. If you go to exchange your currency in the bank, the price they sell to you and the price they buy from you are different, right? space between these two prices is referred to as the spread. So we're going to go over to question number 3. What kind of chart do you see on the diagram below? Number 3, what kind of chart do you see on the diagram below? Option A was line chart, B was bar chart, and C was candlestick chart. Well, only one of these options can be correct. So let's see which one is correct. C, a candlestick chart. So the diagram you have here is a candlestick chart. It's not a line chart. A line chart gives you like a line chart just smoothens the direction of the market for you. It takes away all the noises. It's just like a line, right? Takes away all the noises and gives you the prices of, gives you the prices after calculating the average closing prices of market at a specific time. Connect the dots and smoothens the direction of the trend so that you can visibly see that this is where this market is going, and that way it doesn't give you, a line chart doesn't give you a detailed explanation of what's happening in the market. B is a bar chart. A bar chart is basically a collection of price bars that consist of a vertical line that shows, the highest price reached during a period and the lowest price reached during a period. So the answer is candlestick chart, because the candlestick chart shows you the high, the low, the open, and the closing price of a candlestick, and gives you a detailed explanation of what happened within a specific time period. So it gives you open, close, high, and low of price within a specific time period. Okay, so answer to number 3 question is candlestick chart. We're going to move to number 4, right? If you're learning something, let me know in the comment section. If you're learning, let me know. If you're getting new knowledge, let me know in the comment section. Okay, so number 4 is, how many US dollars do you need to buy 100 euro? If the price of Euro USD is 1.19567, how many US dollars do you need to buy 100 euro? A, 119.567, B, 11.9567, C, 1.19567, and D, impossible to calculate without USD price. Well, only one of these options can be correct. Let us see which one it is. The correct answer is A, 119.567. So you need $119.56 to buy 100 euro. Now, a lot of you would be asking, how did we get $119.56? In a currency pair, the first currency is the base currency and the second currency is the quote currency. Now, in this question, you're being asked how much of the quote currency, which is US dollars, would you need to buy 100 euro? The formula is to calculate or multiply the exchange rate by the amount of the base currency that you want to buy. Now, the exchange rate here is 1.19567. Remember the formula, guys. 1.19567. You multiply the exchange rate by the amount of the currency that you of the base currency that you want to buy. The amount of the base currency that we want to buy here is 100 euro, right? Remember, the 100 euro is the base currency, so we want to buy 100 euros. So what do we do? If I put on my calculator, let's do the calculation really quickly. So if I put on my calculator, so we just do we just use the formula. The exchange rate 1.19567, right? Multiplied by the amount of the base currency that you want to buy. Boom, we have 119.567, which is option A, $119.56. So that is the amount of US dollars you would need to buy 100 euro at this exchange rate, 1.19567. Okay, so that's how we got A as our correct answer. So if you got the answers correctly, congratulations. We're going to go to number 5. What does a 0.01 lot equal to? A, 100,000 monetary units of a base currency. B, 10,000 monetary units of a quote currency. And C, 1,000 monetary units of a base currency. Only one of these options can be correct. Some of you said A, some of you said B, some of you said C. Let's see which one of these answers are correct or is correct. So the correct answer is C, 1,000 monetary units of a base currency. Now, why is that? In Forex, we have 3 types of lot size: the standard lot size, the mini lot size, and the micro lot size. Now, a standard lot size contains 100,000 units, right? The mini lot size contains 10,000 units, and the micro lot size contains 1,000 units. The standard lot size is denoted as 1 in your trading app. The mini lot size is denoted as 0.10 for one mini lot size. And for one micro lot size, it is denoted as 0.01, and it contains 1,000 monetary units of a base currency. What this means is that if you open a trade with one micro lot size, which is 0.01, then you are opening that trade. If it's a buy or a sell, whichever one it is, you are buying or selling the base. You're buying or selling 1,000 monetary units of the base currency. Okay, which is why our answer for number 5 is C. Okay, so yeah, 5 down, 5 more to go. Number 6. What does leverage do? A, increases your trading account balance. B, allows you to open orders with significantly smaller balance. And C, you can only trade Forex if you use the leverage. Like I said, guys, only one of these options can be correct. Let's see which one it is. The correct answer for number 6 is B, allows you to open orders with significantly smaller balance. Right? Now, why is it B? Leverage is like an advantage. It's provided by your broker for you to be able to open or to buy and sell more units of a currency that you would not be able to without the use of leverage, right? So it doesn't increase your trading balance. Your trading balance remains the same, but with leverage, you can use that trading balance to buy and sell more units of a currency. That is why our answer for number 6 is B. Leverage allows you to open orders with significantly smaller balance. And it's important to apply risk management while using leverage because it's a two-edged sword, right? So it's very important that while you take advantage of leverage, you also apply risk management. You stop loss on your trades, take advantage of risk to reward ratio while you trade. Okay, so six correct answer for number 6 is B. We are going to move to number 7. We are going to move to number 7. Which leverage allows traders to get bigger profit but carries the bigger risk? A 1:100, B 1:200, and C 1:500. Only one of these answers or only one of these options can be correct. Is it A, B, or C? Let's see. Let us see. Which one is correct? C. The correct answer for number 7 is C, 1:500. Remember, with leverage, you can buy and sell more units of a currency, right? So when you have 1:100, what 1 signifies is your trading balance. 1:200 also signifies, or 1 in 1:200 also signifies your trading balance. 1 in 1:500 also signifies your trading balance. Now, what does 100 mean? What does 200 mean? And what does 500 mean? Basically, your broker takes your broker multiplies your trading balance by 100 if you're using a 1:100 ratio. If you're using a 1:200 ratio, your broker multiplies your trading balance by 200. And if you're using a 1:500 ratio, your broker multiplies your trading balance by 500. So if I was using let's say I use $100 as my trading balance, right? And I decide to use the 1:100 leverage. How many units would I be able to buy and sell? How many units of a currency would I be able to buy and sell? Right? Type it in the comment section. If I use $100 as my trading balance and I decide to use a 1:100 ratio, how many units of a currency would I be able to buy and sell? Let me know in the comment section. So if I have $100 and I decide to use a 1:100 ratio, how many units of a currency would I be able to buy and sell? Akarim says 10,000 units. Chukwu Emilia says 10,000 units. OC Samson says 10,000 units. Gold says 5,000 units. The correct answer is 10,000 units. Now, this is why I asked you guys the question. So if my $100 can be multiplied by 100 to give me 10,000 units to buy and sell a currency, then how much would a 1:500 leverage give me to buy and sell a currency? How many units? If I use that same $100 in trading balance, for example, and I'm using a 1:500 leverage, how many units of a currency rather would I be able to buy and sell? Let me know in the comment section. We're using 1:500 this time, guys. Mishak says 50,000 units. Danok says 50,000 units. Alexander says 50,000 units. So, you see, Vincent says 100,000. Nah, it's 50,000 units. Which is why our answer for number 7 is C, because it's 50,000 units, right? That's big. That's more than 10,000 units of opportunity to buy and sell a currency, right? Which is why number 7, the answer to number 7 is 1:500, because 50,000 units, can get me bigger profit, but can also expose my trading account to a significant amount of risk, which is why you should use or apply risk management strategies on your trades, always use stop loss, use a conservative lot size, and use a moderate risk to reward ratio. Okay, that's for number 7. We're going to number 8. How is an account equity calculated? A. Required margin plus open orders profit minus open orders loss. B. Account balance plus open orders profit minus open orders loss. And C. Free margin plus open orders profit plus open orders loss. Only one can be correct. Let's see which one it is. So the correct answer for number 8 is account balance plus open orders profit minus open orders loss. Option B. Account balance plus open orders profit minus open orders loss. What is equity? Equity in Forex is the sum of a trading account balance and all its unrealized position. By unrealized positions, I mean positions that are still open, floating. The financial results of these positions have not been achieved, right? So these positions are still open, and the floating open positions can be profit or losses, and it will determine the value of your equity and could also have a significant effect on the value of your account. So if your account balance is $100 and you're in profit of $20, then your equity is going to be your account balance plus your profit, which is going to be $120, right? If your account balance is $100 and you're in a $10 loss, your equity is going to be your account balance, which is $100 minus $10. So your equity is going to be $90. That is why the answer to number 8 is B, account balance plus open orders profit minus open orders loss. Okay, let's move to number 9. What is the maximum recommended amount of required margin for beginners to open orders? A. 10% of total trading balance. B. 50% of total trading balance. And C. It doesn't matter if you have a strong signal. Only one can be correct, A, B, or C. Let's see. The correct answer for number 9 is A, 10% of the total trading balance. What is a margin? A margin is a deposit, a good faith deposit with a broker to open and maintain positions in one or more currencies, right? And in this case, the maximum recommended amount of required margin for beginners to open orders is 10% of total trading balance. If you're trading $100 and you know your good faith deposit, your margin is 50%, what you have left is 50%, and you don't 50%, which is going to be $50, and that's not going to be enough if you want to open more trades, or that's not just healthy, okay, at once to just have 50% of your trading balance running, or set aside in one order or in 4 orders, or in fact, you just have to keep your risk at a minimum, right? And number 6, option C, it doesn't matter if you have a strong signal. Is not also true, because you always have to minimize your risk. That is your tool, right? Your risk is your tool. If you can't be so sure of your entry, you can't be so sure of your signal, so you just have to minimize your risk. Okay, and that's why the answer to number 9 is A, 10% of the total trading balance. Last question, number 10. How do take profit and stop loss pending orders work? How do take profit and stop loss pending orders work? A, close your market order at a certain level when market price reaches it. B, close your market order when your floating profit and loss reaches a certain level or a certain value. And C, close your market order at the exact date and time that you set. Only one can be correct, guys. Is it A, B, or C? Let's find out. The correct answer for number 10 is A. Close your market order at a certain level when price reaches it. That is the correct answer for number 10. Now, what is a take profit and stop loss? These are instructions, they are orders that you give to your broker saying, this is where I want to take my profit on this trade, this is where I want to stop my loss should markets go against me. And these are automatic orders. So even if you're not online, or you're not with your phone, or your battery is low and your phone isn't on, as far so far you have your take profit levels and your stop loss levels input on your trades. So far you've entered those levels, take profit and stop loss on your trades. It's automatic, so you don't always have to be online for the take profit to be triggered or the stop loss to be triggered. Once price gets to any of these levels, it's going to automatically take the profit and secure your profit to your balance, or stop your loss to mitigate the effect of negative trades on your trading account, so that if the market keeps going in the wrong direction, you don't get to lose huge money. Okay, which is why the answer to number 10 is A. It closes your market order at a certain level when market price has reached the take profit or the stop loss level that you have imputed on your trades. So this is the answers for the 10 live quiz questions by OctaFX. Let me know in the comment section how you did. Did you do good? Let's see. Let's see. Esther says I got all answers correct. Wow. Okay. Well, we're going to do a Q&A session. So I've explained the answers to every question, but if you still have some questions, this is your time to ask me those questions that you have so that I can answer them. This is your time. Joshua says, does pending orders have anything to do with take profit and SL? Why it was identified as a pending order is that the price has to get there. Price has to get to the take profit level or the stop loss level. If it doesn't get there, it's pending, right? So until price reaches those levels, then your trades would still be open and your financial results would not be achieved. Okay? Okay. Questions, guys. Let's see. Oh, happiness is 7 over 10. Well, the good thing about the quiz is that you don't just answer questions, but you learn, right? You learn. I'll also explain to you guys the answers, the correct answers to these questions, so that you can improve on your knowledge about the Forex market. A successful trader is an educated one. So when you get your PDF trading guide, it's important that you also look at that and learn about the Forex market so that you can improve your knowledge on the market. So that's the most important part, learning. Adeniji says, I've learned quite a lot today. Thank you for participating. Okay, I'm going to take one last question. This one is by Calm Your Nerves. Anyway, the question is, please can you highlight more on equity? So I said that equity is your account balance plus profit or your account balance minus loss. It all depends on your positions, right? I'm going to give you this example. If I have 100,000, oh, that's too that's too big. If I have $100, right, and for example, right, if I have $100 and I am in profit of $20, my equity. Remember, $100 in account balance, guys. $100 in account balance. So if I have $100 in account balance and my uh, um trades, I have open positions that are in total profit of $20, my equity is going to be $100 plus the profit, which would be $120 in equity. So the equity just tells you this is how much you're going to get if you close all your positions right now. If I'm in a $10 loss, then my equity is going to be $100 minus $10, which would be $90. So it's basically, this is how much the equity tells you this is how much you're going to get if you decide to close all your positions right now. So that is the explanation to or the explanation for equity. Um, so yeah, you guys have been amazing so far. Um, thank you all for participating, and I'll see you guys next time. Thank you.